I'm called the Bitcoin maximalist by a lot of people because I see the value of Bitcoin. All the other stuff is a hype machine.
Move over, baby boomers. It's time for Gen XYZ. It's time to stop waiting on the world to change. It's time to be the change. It's time to stop thinking about how your life can be better. It's time to start taking action, massive action to improve your life. Join Zach Winter and Rios every week as we learn how others had the grit, determination, and conviction to 10x their lives, and as we explore ways that can help you 10x your life.
Hi, and welcome to another edition of the 10x for Gen XYZ podcast. I'm Zach Winter.
And I'm Rios.
And we're very excited today to have as our guest Jimmy Song. Jimmy is a true expert in Bitcoin. He's been a Bitcoin developer. He's taught and educated on Bitcoin. He's a Bitcoin entrepreneur. He's actually written, I think, 4 books at this point on Bitcoin, and he's an advisor and an investor in many different Bitcoin companies. Jimmy, welcome to the show.
Thanks for having me. It's a pleasure to be on.
Yeah, we're really excited to have you on. I've been investing in Bitcoin a little bit since 2017, and I know Mark's delved a little bit into crypto and has dipped his toe into investing as well. So we're more investors on the real estate front, but we're also very interested in crypto and very interested in Bitcoin. So we're really happy to have you on board for the podcast. Maybe we could start at a high level and give us your thoughts on what the current state of Bitcoin is. To what extent is it being used as a medium of exchange or money? To what extent is it being used as a store of value like digital gold? And to what extent is it being used primarily as an investment alternative to like stocks and bonds and real estate and other investments?
Yeah, so I think the past year or two has really put Bitcoin into the spotlight just because of what's happened to our current monetary system. I'm sure you're both very well aware of what's been happening with inflation, the prices going up at the stores, the many trillions of dollars that were printed to debase the U.S. dollar. It's coming home to roost. We're seeing 8.5% in the CPI increase. That's probably undercounting it significantly. If you look at the M2 money supply, it's gone from 15 trillion to 22 trillion in the past 2.5 years or so. And if you annualize that, that ends up being, like 18, 20%, somewhere around there. And that's a significantly higher inflation than we're being told. Even in places like Germany, they're seeing inflation prints of 7.5%, 8%. So inflation is a big deal. And a lot of people don't really understand how it works because we're never really taught how money works. And I tell people, like, you're going to see Bitcoin as a plaything, an investment, if you will, something like that, until you really understand how the current monetary system works. And once you understand that, then it becomes, then this is the obvious counter to all of that, because it's the current fiat monetary system is something that the central bank can print. And not just the central bank, but commercial banks and retail banks, they get to print money into existence. And this is happening all over the world for all sorts of reasons. But essentially, if you're holding any fiat currency, you are losing value on a consistent basis. So that's one aspect of it. And that speaks to your store of value point, in that if you want to defeat the natural effects of inflation, the debasement of our money, then you're going to have to put it into something else, something that stores value better. I understand that many of your listeners are probably real estate people, and they know that real estate is scarce. Go get land, because they're not really making any more of it. Bitcoin has that same property. It's absolutely scarce, and that's why it's a good hedge against something like the US dollar. Now, as to the other point, the other major thing that's been happening recently is, something that happened with financial censorship, specifically with the Canadian truckers. A lot of people were trying to donate to them, and the Canadian government basically seized all their funds, or the companies that were working with them got pressured by various governments, and they basically just threw in the towel and said, we can't deal with this. We can't give it to the Canadian truckers. Instead, we found that the only thing that the Canadian government couldn't really seize was Bitcoin, and that's that speaks to its censorship resistance. It's an inability to be seized or controlled or choke pointed or failed in some way because of a single place where everything flows through. And that is also another property that is coming to the forefront. If you're in Russia or Ukraine at the moment, Bitcoin is a lifesaver because you can go sell your possessions for Bitcoin, leave the country, and start a new life somewhere else. And that's not really possible if you have the ruble or the, if you're in Ukraine, obviously you're under a lot of attack or whatever. So there's a lot of things sort of coming to a head that make Bitcoin very, very useful in many, many different contexts. That said, I will quibble with you about like lumping crypto into the same thing, because crypto or altcoins do not belong in the same category. They are just as censorable, just as centralized as fiat money is. And we've seen this too in the Ukraine conflict. There are two supposedly decentralized services. One is called MetaMask, the other is called OpenSea. Both of them were supposedly decentralized services that refused to service Russian users. How decentralized is it if you can like just censor a whole bunch of people? So those things are all centralized. And I think it's fairly clear that Bitcoin is very different and belongs in a separate category. This is why I'm called the Bitcoin maximalist by a lot of people, because I see the value of Bitcoin. All the other stuff is a hype machine, and it's a quote unquote investment in the sense that if you get in before everyone else and sell before everyone else, then you can make some money. But I mean, you're not contributing anything to the society. You're not building any goods or services that benefit anybody. It's just some weird gambling status game that a lot of people are playing. So I think that really needs to be clear to your listeners that Bitcoin is completely different because of its decentralized nature. All of the other stuff, NFTs, DeFi, altcoins, ICOs, whatever, they're all different. They're all centralized, and they all have the same vulnerabilities as fiat currency.
So when you say centralized, just so I understand, what you're saying is that there is, for example, with a different currency, there are people who control that currency and can decide to essentially print more of that digital currency. Is that right?
Yeah. Well, I mean, they don't print it on a continuous basis. Most of them just pre-mined it, and that's a lot easier and a lot easier to market. So what most of these projects do is they print a ton of tokens for themselves and their VC friends, and usually give it at a huge discount to the VCs. Who will then go say lots of good things about it to the public, to their friends in TechCrunch and Wired and New York Times and Wall Street Journal or whatever, and say, get them to say wonderful things about this new currency that they got in at pennies, and then they dump on retail. Now, it's good for the VC because they're going to make, 10x their money in like 6 months. And be able to give a return to their LPs. But the people that get screwed are retail, and not just retail in the US. Like, you go ask people in Africa about Bitcoin, they associate it with altcoins and go, oh, I don't do that because I lost a lot of money. Those are the people that are being stolen from. And it's unconscionable to me that all these altcoiners like pretend that they're adding value when in fact they're playing these Ponzi scheme scams to get, people to, pump their bags, basically. And a lot of them believe what they say and stuff, but I can assure you that they don't really understand what's going on underneath in the technological sense. And they're very ignorant of the economic reality of all of this, which is that the VCs win, the rich people that got in early win. I mean, Ethereum, I think 70% of it was, given to VCs and friends and family or whatever. Ripple, it's probably closer to 80 or 90%. And like all of this stuff is to make a few people rich at the expense of everybody else. Bitcoin is very, very different because it wasn't started that way. completely fair proof of work mining. And there's nobody that controls it. All of these other things, Vitalik says you're moving to Ethereum 2.0, you're moving to Ethereum 2.0. Vitalik says you're moving to proof of stake, you're moving to proof of stake. It's no different than a central bank. And I like fiat money has more in common with altcoins than Bitcoin does with altcoins.
Maybe just to educate our audience, I'd love it if you could explain the process for getting to 21 million Bitcoin, how many we have now, and the halving process, and why there will never be more than 21 million.
Yeah, so the original source software came out with what's called an emission schedule. And this is basically the rate at which new Bitcoins are created. And this is what's called like the miner block subsidy. So miners get sort of like a bonus other than the fees that come in through transactions. So whenever you send a Bitcoin transaction, you include a fee so that the miner includes your transaction in their block or a new page in the ledger, something like that. And in order to do that, you provide them an incentive and provide a fee. So they collect some fees from the transactions that they include, but they also get a bonus. And this is how new Bitcoins come into existence in the form of a block subsidy. And that block subsidy, at least at the beginning, was 50 Bitcoins per block. And for the first 210,000 blocks, it was 50 Bitcoins per block. And then for the next 210,000 blocks, it was exactly half that. So 25 Bitcoins per block. So 50 times 210,000 is 10.5 million. It's exactly halfway from 0 to 21 million. So you're at 10.5 million after 210,000 blocks, which if you calculate out is 2.1 million minutes, which is roughly 4 years, almost 4 years. It's about 3.96, something like that. So about every 4 years or every 210,000 blocks, it halves. So the next 4 years, it was 25 Bitcoin per block. And again, 210,000 blocks times 25, it ends up being 5.25 million. So you go from halfway from 10.5 to 21 million. So at that point, you would have 15.75 million, right? Bitcoin. And then it halved again to 12.5 for the next 210,000 blocks. And that ends up being half of 5.25 million, which is 2.625 million. And that 2.625 million Bitcoins came into existence in the third sort of epoch of Bitcoin. So you go halfway from wherever you were to 21 million. So every 4 years, you get halfway closer. And it's kind of like Zenos Paradox, right? If you just go halfway to the destination, you almost get there, but don't quite. So we never actually reached 21 million Bitcoin, but you get halfway closer every 4 years. And that we're currently in the fourth epoch. So the mining reward is half of 12.5 or 6.25. And we just passed the 90% mark, 90% of all Bitcoin. And the way that exponential math works is that to get from 0 to 90% is the same amount of time that it takes to go from 90 to 99%. And then it's the same amount of time to go from 99 to 99.9% and so on. So, that it took roughly, let's see, 13 years or so. So it'll take another 13 years to get to 99%, another 13 years to get to 99.9% and so on. So that's how the math works, but you never quite get to 21 million. And of course, there's a bunch of coins that are lost. There are unspendable coins for various reasons. But yeah, the current supply is around 19 million or so.
And theoretically, like let's say in 13 years, when the amount being rewarded is much, much less, what's the incentive for all of these miners to continue to validate transactions?
So that the block subsidy is just a bonus. The normal part of what pays a miner is the fees. So right now there are thousands of transactions that go in every 10 minutes, and those transactions pay fees. And, some of them are fairly small, but others are fairly large, depending on how many transactions there already are that are trying to get in. And the miners will take the economically most favorable to them. And that's how they make their fees, or they make their money in addition to the block subsidy. So for a time there in 2017, for example, when the block subsidy was 12.5 Bitcoin, there were actually blocks that had more than that in fees. So there was a block that had like 13 Bitcoin in fees and 12.5 in block subsidy. And it subsequently happened more recently in the 6.25 era. Maybe in a couple of halvings, we'll probably see, fees that are higher than the block reward, which will be like less than 2, something like that. So, that's what's supposed to sustain them. This is what we in Bitcoin call the fee market. It's a market of transactions that are trying to get into the blockchain, and depending on, how they price the fee, then the miner will be incentivized to collect it.
Right now, so I could see Bitcoin's definitely being used as an investment alternative. Lots of speculation about where the price of Bitcoin is going, and I can see it being used as essentially a store of value, digital gold. People concerned about inflation, seeing the dollar being devalued at extreme rates. Having it being used as a medium of exchange, I still think it's in its very much infancy there. I'd love to get your thoughts on that, and about what the Lightning Network is, and whether that will accelerate the adoption of using Bitcoin as a medium of exchange.
Yeah, so it's certainly used as a method of payment already. And before everything was done on chain, particularly in 2017, and that's why we had that giant fee spike or whatever. But the Lightning Network has developed tremendously over the last 2 years. And I can tell you personally, I'll go to a Bitcoin conference, sell some of my books, and about half the transactions will be done on Lightning Network. And about 40% of transactions, people will just hand me cash, and maybe 5% of transactions on Venmo or something, and another 5% on chain. So and those percentages used to be very different even 2 years ago when I would sell books at conferences. A lot of people are using Lightning, and you can see that especially in places like El Salvador, where you're able to pay for stuff using the Lightning Network. So I visited a few months ago, and I got picked up by a van sent by the hotel. I got to the hotel, and they gave me a little SIM card. I inserted the SIM card into my phone, and I had Wi-Fi access there. And there was an option to get cell phone services using Lightning payment. So I was like, oh, okay, let me do this. Pasted the invoice. I think I paid $4 for a week of internet using, the 4G or something like that, and I was off to the races. Didn't have to pull out a credit card or anything, right? Like it was just I used Bitcoin to do it. Went down the street, bought some empanadas for some people that were with me, and I was like, I don't eat this stuff, but if anyone wants it, I'll pay for it. Paid a little girl that was like 14 years old that was cooking empanadas on the side of the street from a wood fire tire stove or something like that. And didn't even have electricity, but she can collect Lightning payments. And that sort of thing is definitely developing all over the world, and we're seeing it a lot more on a lot of different places, and it's becoming very exciting.
I got a quick question, just real quick on that, if I can jump in. So with the Lightning, this is kind of something new that I'm catching up on. Is the Lightning Network, is that decentralized as well, or is it kind of on the level as Coinbase?
So it's actually even more decentralized than Bitcoin, because there's no central repository of all transactions like on the Bitcoin blockchain. So the Bitcoin blockchain is literally a record of every transaction that's happened on Bitcoin since 2009. And you can go look at it, and there are block explorers that let you click through and see all of the details of every single one. The way that the Lightning Network works is basically, imagine that you and I were doing a lot of business, Mark. Like, we trade back and forth to the point where we're doing like 100 transactions a day. Sometimes I pay you, sometimes you pay me. Now, we could do every single one of those transactions on chain, but it would be much better if somehow we can like hold each other's collateral and then net it out at the end of the day. And that's essentially what a Bitcoin Lightning channel is. It's a transaction that gets updated, and you only publish to the chain every once in a while. But it's done in a cryptographically secure way so that only the latest state, the absolute last state, gets to go on chain. And if either of us tries to cheat, we can take the other person's money. Those are the rules. And it's a brilliant system, because if I have a channel open with you and you have a channel open with Zach, now I can pay Zach through you. We just net it out among ourselves, and then you net it out with Zach. And I'm sure you've done this with your friends, right? Oh, you owe me $5, but I owe this guy $5. Why don't you just pay him $5? That way we can like just cancel both things. And it's very clear. Now you can have an entire network of channels, and that's what the Lightning Network is. It's a cryptographically secure way to transfer among all of these channels. So you could do thousands of transactions in there, and only a few relatively go on chain, only when capacity runs out or when people need to update or something like that. Which means that it is enormously scalable, and we've seen this in many places that do use Lightning.
So those let's call them accrued transactions, I guess. It's almost like a ledger, right? So those accrued transactions, are they actually on some sort of blockchain stack themselves? So it's
well. So the way it works is that it's cryptographically secured. So if I were doing that channel, and the channel updates with every transaction, right? Like, I pay you 3, you pay me 2, I pay you 1, and each of those like updates to net it out. The last state is what we both keep a record of. And if either of us tries to publish something before that, or some previous state, then the other person can punish in what's called a justice transaction by taking all of my money in that channel. So we both contribute some amount of money, and if one of us cheats, then you just take all of it, which is like game theoretically, neither of us are incentivized to cheat at that point. So that's basically how it works. But we keep the transaction that we could potentially publish to the chain at any time. And either of us can close it at any time by publishing that transaction on chain, in which case it settles at the last state that we had. But if it's a previous state, then the other person can punish by taking all of the money. So we're getting into the weeds a little bit here, but that's basically how it works.
Okay. Yeah, because I've heard that that's kind of the next thing, and at least for retail people getting used to, being able to transact. That sounds like that's probably going to be the one that's the most front facing for a lot of people in the next 5-10 years.
Yeah, I mean, it's already front facing for a lot of people, and you can right now go and buy a bunch of stuff with Lightning if you wanted to. My friend just launched like message me for sats kind of thing, where you have a Twitter profile, you don't want to open your DMs, but if people want to contact you, they just pay you some sats to send you a message and you can read it. And I set that up, and it's great. Those are the sort of things where Lightning really shines, because you can add different things on top of it. And this is where a lot of the decentralized web stuff is coming in. So there's a service called Zion that's I think still in alpha, but basically it's kind of like Facebook, except you own your own data and you run your own Lightning node. So you could charge money for your feed if you wanted to, or you can send it out for free, but you own your own data. No one can censor you, right? And people that are subscribed to you, it's a bilateral relationship instead of a relationship with a third-party company that holds all your data and is sort of like a broker and censor or whatever. Instead, you have direct relationships with other people, and that can be built natively on top of the Lightning Network because you can use the Lightning network to communicate data and not just money. So it ends up being a very interesting sort of thing. And there's a whole bunch of Lightning services that are out already. It's a bunch of games that use Lightning payments for various, cool game items or something like that. And it's pretty cool. It's very interesting how people have started using it because we've not really had this natively digital payment system that's peer-to-peer before, and people are finding uses for it.
Are they able to stack Lightning on top of other protocols? So like on top of Ethereum or Ripple or anything like that? Or is there a need?
They can, but I don't think there's a point because those are all centralized platforms anyway, and they're not censorship resistant. And you are at the mercy of their central controllers. So like making a Lightning protocol on top of those, I suppose, you can, but I don't really see the point to it because as it is, there was something called the Poly Network hack about 6 or 7 months ago, and it was for nominally $600 million. Some guy took $600 million from the smart contract that was very badly written by the Poly Network team. And the Poly Network team tweeted out, "Hey, dear hacker, you might want to return that money to us because you're not. We've already told everybody what your address is, and that they shouldn't mine it, that no exchange should accept it, et cetera, et cetera. And you're going to have a tough time liquidating the $600 million." And the hacker listened. Said, "Okay, all right, fine, I'll settle." He got, I think, a $500,000 bounty for a bug. But another way to look at it is more than 99.9% of the value of those tokens was based on the people in charge approving of your transaction, right? And if you have something like a Lightning network on top of Ethereum, then it's dependent on the approval of the Ethereum people. The whole point of the Lightning network is so that you can do these like peer-to-peer transactions without the need for a central authority. So in a sense, it's kind of pointless. Maybe you get a little more speed, but I think Ethereum blocks are like every 15 seconds anyway. So yeah, it doesn't make any sense.
I think that's the thing is just to my simplistic understanding of the Lightning, and maybe it's based on the name. Branding is everything. So for me, it's like, okay, they put this protocol to speed transactions up, right?
Yeah, and to scale transactions.
And to scale, but you're kind of describing the underlying portion of that, which is the peer-to-peer thing, which seems like it kind of belies a little bit of that Lightning part of it. I know it's faster, but there's more to it than just what I'm thinking of. So
yes,
I get it. I understand.
Yeah.
I understand.
Jimmy, what are your thoughts on the need to regulate crypto and Bitcoin specifically? Good or bad thing ultimately for Bitcoin?
I think it's inevitable. And, I'm part of the Bitcoin Today coalition for that reason. We're 501c4 to educate politicians about Bitcoin. We wrote a book, Bitcoin and the American Dream, to educate politicians on who we are, what we're about, and we're not who you think we are. Like most people think, oh, Bitcoiners, they're a bunch of anarcho-capitalist, libertarian, white young men. And that's not true. Like just demographically, it's straight up not true. Black people are more likely to own it than white people on a per capita basis. There's a whole bunch of military veterans, for example, that are into Bitcoin. There's a lot of boomers that are into Bitcoin, like people that you wouldn't expect that are into Bitcoin. And this is all part of this constituency. And if you like sort of pigeonhole us into thinking that we're just a bunch of anarcho-capitalist, libertarian, white young males, you're definitely not catching what this movement is about at all. And that's something that we're trying to fix in DC. Now, do we want regulation? I mean, like, I think it's inevitable, so I'd rather get good regulation than bad regulation.
Yeah.
But in a sense, like, it's a peer-to-peer thing. It's very hard to regulate stuff like that. It'd be like a state saying, all right, like, if you trade anything with your neighbor, we have a right to tax it or something like that. Which I guess they could. And technically, if you sell something on Craigslist, you have to pay sales tax or something like that. But very few people do, right? And the state's not necessarily interested in enforcing all of those things. And if they did, I think people would recognize it for what it is, which is tyranny. They're getting in the middle of transactions that they really have no business being in. So, regulatorily, a lot of regulators, like, that's the only hammer that they know. It's regulation.
Yeah.
I think some of it is coming, some of it justified, obviously, around altcoins and all the scams that are going on there. Many governments have taken steps to mitigate that. South Korea in particular, after the 2017 craze, basically banned everything because it was just getting so out of hand, and a lot of people there lost money. I suspect that sort of thing is inevitable around the broader crypto space. I would say that most people that actually know the tech recognize that Bitcoin is very different. People like the SEC chairman Gary Gensler in particular. He's been quoted as saying, "Okay, Bitcoin is clearly decentralized. All of these other things look like illegal securities," and I think that's probably right because many of them sort of hide behind this moniker of blockchain and decentralization as a way to avoid a lot of the regulatory scrutiny that they probably deserve. If this were done any other way, they would have been prosecuted for fraud many, many years ago. But because of this confusion and because of VCs pumping the hell out of it and buying out all the favorable news for all of this stuff, and obviously the advertisements and the celebrities that get into this stuff, there's at least temporarily some protection around this stuff. But I think it's inevitable that a lot of this stuff will no longer be legal because it's clearly ripping a lot of people off.
Yeah, I mean, right now, if you look at the price of Bitcoin and Ethereum and all the shit coins, they all seem to be correlated. So when Bitcoin moves up, for example, all of these other coins tend to move up. But I can certainly see a scenario where if the SEC comes out and says Bitcoin is not a security, but all of these others are, they're no longer correlated.
Well, but there's also that there's going to have to be some loud voices to really get in the middle of that, to try to separate out what you're talking about, Jimmy, that Bitcoin in and of itself is so different than all this other stuff.
Yep.
And the majority of all that other stuff is, 75% versus 25% Bitcoin. Like, the tendency is going to be, no, it's all crypto, and we're not going to distinguish between.
Yeah, and this is part of our education effort, is in helping politicians understand the difference. And I have talked to Senator Cruz, for example, and he seems to get it. And I've explained things, and not a surprise. He's been a Supreme Court advocate and lawyer, and I think he has one of the best win rates in the Supreme Court, for example. So he's a smart cookie. He gets it. He seems to understand what Bitcoin is. Senator Lummis is another one that gets it. The confusion is almost purposeful and willful by a lot of the people that are pumping all these altcoins, and part of our mission is to make it clear that Bitcoin really is different. You could try to choke it out or try to regulate it as a single point of failure kind of thing. It's not going to work. Whereas with Ethereum or Cardano or Ripple or Solana or whatever, you could just go to the people that issue the tokens, right? Who made the token and distributed it to the VCs. Go to that person, and charge them with fraud. It's pretty easy, or shake them down for money or whatever that regulators want to do. That's I think pretty inevitable, and that's something to note, I guess, to think about if you're investing in any of this stuff, because once an indictment like that comes down, like, good luck. We saw with Ripple, the SEC lawsuit, coming, and Ripple is fighting back hard because they basically printed their own money. They literally have like billions and billions and billions of Ripple in their treasury that they pre-printed and they can just go spend. It was revealed recently that Chris Larson's been funding all of this FUD against Bitcoin about its energy use. He's like paying millions of dollars to Greenpeace and to other organizations. He's donating money to all these campaigns to try to influence this stuff. I mean, this is the dirty game of politics. It's definitely happening, and that's why we feel the need to fight on Bitcoin's behalf, because otherwise it's just going to be a lot of altcoins slinging mud at Bitcoin and making it look like we're all similarly filthy or something like that as they are.
Yeah, you're fighting the good fight. Keep it up.
Well, go ahead, Zach.
So I just wanted to ask, so obviously, the U.S. is the dominant world reserve currency right now, but it's weakening. And there's, Russia's in discussion with China and working together with their economies. And, maybe the Chinese yuan is going to play a larger and larger role as being a reserve currency. But I'm wondering what your thoughts are on potentially Bitcoin becoming a reserve currency for one or more countries.
Yeah, I think it's inevitable because it's politically neutral. The US dollar is very political. And unfortunately, it's, especially with this most recent conflict in the Ukraine, I think they just completely burned themselves because they essentially seized the assets of Russia abroad. I mean, that's essentially telling Russia, go use something else. And Russia's saying, okay, we will. Right? We're going to go use some other currency other than the dollar because you clearly don't want us in there. If they're not using the dollar, then other countries are not going to use the dollar. They have a sphere of influence. And China's being a little cagier. You got Saudi Arabia starting to discuss, possible other currencies for oil. So I think the peak of the US dollar hegemony has come and gone, and we're probably on the decline. Now, what's going to replace it? A lot of gold bugs will tell you it's going to be gold because, it's been used as the politically neutral reserve currency. But I don't know. There's a lot of problems with gold, specifically that you have to physically transport it.
Right.
So I think Bitcoin eventually takes that title, whether it's in 5 years or 30 years, I don't know. But I do think it's inevitable because it is politically neutral and it's digital, and we live in a digital world. And like, when's the last time maybe if you're out and about, you'll use cash, but vast majority of the transactions that you do are digital already, whether it's paying your mortgage or buying stuff online or, doing almost anything, you're probably doing it digitally. And that speaks to why it's probably going to take over the reserve currency.
But is there a way to kind of smooth some of the volatility out? Because that is what I would probably see as one of the things. Like, take gold, for instance. Even though it rises and falls, it does it on a much smoother curve than, say, if you were to try to match it up with Bitcoin. I imagine it's trading activity. I think right now there's a lot of people that are trading, that are either cashing in massive amounts or possibly just day trading, in these fluctuations.
Is it possible to smooth that out? eventually with more liquidity, yeah, I think it does that naturally. But we have to remember why other things are not volatile, and that's the real question. The reason why other things are not as volatile is because there's somebody trading against the volatility. So in the FX markets, for example, the Japanese yen has stayed plus or minus 20% of 100 yen to a dollar for a very long time, right? Like I think going back to the 90s, something like that. Now, why is that? It's because the Bank of Japan manages that exchange rate. So if it gets too high, then they will buy some yen off the market using the dollar reserves that they have. And if it gets too low, they will print more yen to make sure that it eases into that ideal range. And all of them do that for every single currency. And that's one of the missions of every central bank is, manage the currency so that like people aren't hurt by it. Because if it gets too high, imports; if it gets too low, exports. One of the two is like too expensive, and then you screw up your domestic economy, and nobody can trade or whatever. And we're starting to see some tensions of that in Japan right now, right? Like the yen is doing the worst it's done against the dollar since like the 80s or something like that. At which point, the central bank steps in and does all these actions to smooth out the curve. Well, Bitcoin doesn't have a central bank, so of course it's going to be more volatile. But it is subject to a lot of the sort of momentum trading and volatility that a lot of people engage in. But over a long period of time, like that's the real thing for me is over a long period of time, it's done way better than the dollar, and that's what people are looking at when they're looking into something to save over the long term. Now, day to day, you might not want to use it, but even there, the fluctuations aren't enough for you to be like, you know what, that coffee is $3. It's $3.30 right now because Bitcoin is down, or it's $2.70 now that Bitcoin is up. Doesn't make me necessarily want to like not buy it or buy it based on that. It's we're not talking 50% anymore. And like we're talking, on a bad day, a 5% fluctuation. That's something, if you're using it as a method of payment, it's not usually going to be a big deal. But and if it is like a bigger purchase, well, you're going to plan that out a little more ahead of time anyway, and you're saving for it. If you're buying a car or something, it's not something that you just buy. You usually save up to go do it. And if you're using Bitcoin as a standard, you're probably putting in less in terms of US dollars because of the price appreciation on Bitcoin over that period of time to be able to afford the car and get essentially a bargain in US dollar terms because you saved in Bitcoin. So it ends up, being beneficial either way. So yeah, like the volatility matters, but it doesn't matter quite as much as you would think, especially once you go on the Bitcoin standard. And the upside of it is well worth it.
I would imagine though too, like the United States would be the very last, country to get on board with replacing the dollar as the reserve currency. They would be the very, very last one. So in terms of U.S., consumers, they wouldn't necessarily be affected. But it does bring up something in terms of, decoupling, because you brought up trade and deficits and stuff like that. Decoupling that process for other countries from their standards and putting it on a decentralized reserve, and how trade will, they can't use those levers anymore. And
that lever has been used for all sorts of evil things, mostly to fund war. Whenever you want to go to war, it's hard to get financing for war. Every king in the past, this was the bane of their existence, and why wars were so mercifully short, because they couldn't finance them. They're very expensive. You have to pay armies and equipment and food and transport and have to make up for the productivity of the people that you're conscripting and all that stuff. It's extremely expensive. It's generally very unpopular. You're destroying a lot of productive capacity, and you're doing it for what? Like to conquer a little more land? Like the long-term gain it wasn't there most of the time, which is why, wars were short. But once fiat money came around, post 1913 or so, you had two amazingly destructive wars, in part because governments could print money to fund their wars. They didn't need to go and get credit from the public. Instead, they just took it in the form of inflation, and that prolonged those wars. That made everything escalating. Nobody was doing economic calculations on war, which tend to stop war. Instead, they just they did it based on ideology, which made them way more destructive, and essentially completely destroyed Europe like twice over. And that's what central banks like doing. It's having those levers so that you can fund stuff like that. And getting away from that, I think, would be a wonderful thing for the world.
The whole concept of a central bank digital currency really seems to be a move by various central banks who recognize and are threatened by Bitcoin. They're trying to retain control and basically create a digital version of their fiat currency.
Yeah, so it's interesting because CBDCs are a whole different play. Right now, you have many layers of banks, right? You have the central bank, which is really a bank for banks. So every US bank has a relationship with the central bank. And when you do interbank settlement, you usually go through the automatic clearinghouse system, which is run by the Fed. And all of that clears within the Fed wire system. That's what, and that was brought in to sort of like stabilize the currency. With a CBDC, you could cut out all of those middlemen, the banks, because all of them have sort of like a responsibility to pump more money into the economy through more loans and so on. But if you cut them all out with a CBDC, now you have a direct relationship with every single person. So instead of me having an account at Wells Fargo or something like that, I have an account at the Federal Reserve. And if they want to give me a stimulus, bam, they can just credit my account by so much. But if they want me to take a haircut, bam, they can garnish my wages. Also, they get access to all of my transaction data, and they can maybe even cut out credit cards and stuff like that. All the middlemen that are making money, that's sort of the impetus behind the CBDC and why China is so bullish on it. Because if they implement the CBDC, they can get rid of all of the other banks, and they can have a direct relationship with their citizens and make it so that, okay, you want to do this transaction, now we sit in the middle. And you happen to be a Uyghur minority, well, you can't travel. No, actually, we're going to go find out where that last transaction was and come and arrest you and send you to a concentration camp. So, it's a way of surveillance. It's a way of cutting out the middlemen. And it's a very different play. And you can make that argument from an efficiency perspective that banks are kind of branches of government already. So why not just go all the way and give it all to the government? That's essentially the argument that's won in China. I think the banking lobby, particularly investment banks, have way too much power in the United States for that to ever happen. But that's the main idea.
I see. What are your thoughts? Maybe you can explain the Plan B stock to flow model, and I'd love to get your take on it and whether you think it's still a viable model and where you think the price of Bitcoin is going.
Well, he discovered a few correlations that were almost purely economic, which is, okay, what's the stock of the current thing, and or the stock to flow model is the inverse of inflation, basically, or expansion of supply of something. So if you look at gold, the stock to flow is 50, or 2% new gold is dug up out of the ground every year. That's added to the supply. With silver, I think it's more like 33%. Aluminum, it's like 100%, or like stock to flow is like 2 or something like that. It ends up being a significantly more amount of that commodity coming in. It's the number of years it would take at current rates to replenish the complete stock of it, something like that.
Right.
And he did notice that Bitcoin followed a stock to flow model in terms of price, that price correlated somewhat to that. I don't know if that model is really valid. I think Plan B told everybody that by the end of 2021, if it hasn't hit 100,000, then my model is wrong. It didn't hit 100,000, so I think he was wrong. Now, is there something to it or a better model that we can make based on some of the concepts there? Probably. But I don't think his model strictly as it was correlated. And so, that's my thought on it at the moment.
So what would you, I was just going to ask just as a follow on to that. So what would you, are you saying that like predictive modeling on prices right now, really, we shouldn't try to do that right now? And
no, I mean, I'm all for predictive modeling if you can figure out a good model,
right.
But they're just that, models. We don't really know whether or not they're correct or not. And I think what everyone wants is like a crystal ball that tells them what the price of Bitcoin is going to be in 6 months or something like that.
Well, of course, because they bought in at 40,000.
And I'm sorry, but I don't think anyone's going to be able to give that to you. What I will say, though, is that in 5 years, no one's ever lost money on Bitcoin. And in fact, vast majority of the time, they've done fantastically well. So, like that's the main thing to go on, is that there is a scarcity that's absolute. It's 21 million ever. And we have, increasing demand and a fixed supply. The only release valve there is price. Price in terms of on a yearly scale, I think it's pretty good, right? It's done extremely well over the last 12 years. And I think it'll continue to do well, given the scarcity of it.
If somebody wanted to get into Bitcoin, believed in Bitcoin, what are your thoughts on buying Bitcoin and just hodling it versus possibly trying to mine some Bitcoin, buying some mining machines and having it co-located where somebody can host it and run it for you?
Yeah, if you happen to want to buy yourself a job, yeah, go for it. I'm not a big fan of buying myself jobs. Like I'm sure that things are great investments, but there's always a lot of work involved on investments like that, right? If you're going to go buy mining machines, you have to now procure it. If it breaks, you have to go get it repaired. If you're hosting it, then you have to make sure that your hosting provider is not screwing you. You have to go find a pool that will charge the least amount of fees while still providing a good amount of service. There's a whole bunch of ways in which you're going to have to get good at a lot of things that you might not necessarily be good in. And it's a lot like gold mining in that regard. There are a lot of people that do mine gold, and if you happen to be very good at the logistics of gold mining, like procuring the heavy equipment, dirt and rock processing and all the chemicals involved, and maybe you have an edge because you are a chemist and you know a better process of filtering out gold out of rock that's cheaper or faster, then yeah, it makes sense for you to go in that direction. But if you know nothing about it, then you have no comparative advantage. The advantage that you have is going to be in whatever you're talented in and what you're good, what goods or services you can provide to the market. In general, with Bitcoin and hard money, the thing that you're going to be able to do the best is going to, that the market finds valuable. That's the thing you're going to be motivated towards going. One of the tragedies of fiat money is just how many of the best and the brightest go into investment banking. Instead, I mean, like we should be like halfway to Jupiter or something by now with, space flight or something. But instead, all the brilliant people, instead of like going and creating rockets to Mars, they're quants on Wall Street, right? Or, I don't know, like VPs at Goldman Sachs or something like that. And that's the real tragedy. It's when the money production business is extremely lucrative in the fiat world. It's not so much in the Bitcoin world, unless you happen to have an edge. So that would be my advice. Like, just go do what you're already good at and what you're passionate about and what the market will pay for, because that's probably going to pay more than whatever job that you're buying yourself by trying to go into mining. If you are good at mining, yeah, go for it. But if you're not, then go do whatever you're good at and make money and stack sats. That's much easier.
Yeah, I've seen Michael Saylor speak on this too, and he has a very similar kind of take on it. Do what you're good at to generate income and use that money to buy more Bitcoin.
Yeah, and that builds civilization ultimately, because you are contributing your particular talent, and that's a very good thing.
Yeah. Interesting. I recently read the Bitcoin Standard, and in it, the author Saif Amus talks about his view, I believe, which is that the blockchain technology, initially when the blockchain technology came out, there was all this discussion about it being used in all these different industries, but his view is it really ultimately doesn't apply to other industries. I'd love to get your take on it.
I completely agree. And if you actually know what blockchain tech is, it's a chain of blocks. It's a linked list of blocks. It's a subset of a database, and not a very fast database at that. It's very expensive. It's very redundant. It doesn't scale very well. So when people are saying, oh, blockchain tech will change this or blockchain tech will change that, I know they don't know what they're talking about, because it's a really slow database that's distributed and all this other stuff. Right. So for you to say it solves this problem in this industry, well, that tells me you have no idea what you're talking about. And unfortunately, there have been a lot of books like The Blockchain Revolution by Dan Tapscott or something like that, which make it sound like it's this magic elixir that can solve all the problems in the digital world. And I blame him for hyping it up that way, because there's been a ton of investment that's gone into quote unquote blockchain technology from a lot of companies and a lot of individuals that have gone to nothing. It's all wasted capital. It's misallocation of capital. Had that gone into spaceships or the Lightning Network or something, like, we'd be much further along. Instead, a lot of very badly informed people are investing in things that are not getting them any returns, or they're using it as an excuse to dump on retail and take their money.
Yeah, in the real estate industry, I continue to see articles about blockchain potentially replacing current day escrow and title, companies, and the way we record on title. And I just can't visualize how is that physically going to work, and who's going to pay for all those nodes, and how are they going to
and you run into the Oracle problem, which very few people seem to get is not a technological problem. It's a metaphysical problem. The thing represented in the database for the Oracle problem is the thing represented in the database, say title insurance or who owns what house, that has to correlate with something in the real world. There's an actual house in the real world, and there's some legal jurisdiction that says you own that house or someone else owns that house. And it's through title searches or some database somewhere. The database might actually be a record of deeds in a large book or something like that. But whatever it is, it's a database, and it's only as good as the data that goes in, garbage in, garbage out. Right. And if you put in bad data, it's still bad data, whether or not you use a blockchain or not. And if you put in good data, it's good data, whether you use a blockchain or not. So it's a completely orthogonal problem. You don't suddenly get everybody telling the truth because you're now using blockchain technology. that's just a ridiculous assertion on
They
its
tried it.
face.
They tried it. They tried it out in Chicago in some county. They did a test. I think it was for 6 or 12 months or something like that. And my understanding was it was a failure, not on the blockchain side of things or the digital side of things, is because the people that were involved, they would not get with the program. They pretty much rejected it. You know, you have county recorders, people whose jobs are to push the paper and to make sure everything's right. And sure, there might have been a learning curve, I'm sure, but like in the end, it became just as hard to kind of record the transaction securely in the blockchain versus, you know, making sure the sign.
You're just giving them extra work without any benefits to them. So it doesn't really make any sense. And like all these quote unquote blockchain technology projects, like they all end up costing tons of money and have nothing to show for it. And this is the question I put to you guys earlier. Like, who's actually using this stuff? Is there anybody out there in the real world saying, you know what? I have this problem. I know what the solution is. I need to use blockchain technology. I need to have a token on DeFi in order to solve it. Nobody does that unless their goal is to get money from gullible people. That's about the only goal that these things fulfill. And I see that as highly immoral. So really, there's no use for any of this stuff. It's just hype.
There are a couple of groups that are, I don't know what they're doing. I guess they have some sort of token or something, but that are raising equity like we do. We raise equity from investors for syndications to purchase, you know, real estate. And so they're trying to put that process and have people, I guess, they're raising equity within some sort of tokenized something or other. Now, I don't know if it's a fund and that money stays in there so it could try to increase value or how they're doing that, but I have seen a few of those things. I still don't understand it.
You don't understand it because they don't want you to understand it. They're printing their own money. That's probably what's happening. And they want you to buy some of their money so that they have some real money. It's such a scam. And I like the whole industry is set up so that, you know, the VCs control a lot of the narrative and they are huge bag holders. So, you know, what happens? Well, retail's the one that gets screwed. It's the poor people that get screwed.
Do you see a point in time where that becomes recognized that all of these other altcoins are little to no value and people start trying, you know, the play to create more and more altcoins starts to go down and people recognize, you know, this is a bunch of crap. These aren't worth anything.
Yeah, I mean, it's already happened a couple of times. We've had giant altcoin crashes and many of them just don't recover. The class of 2013, 2014, many of them are like, have you heard of StoreJ or Mastercoin or Factom? Probably not, right? Like they're all pretty much dead now, right? And the reason is because they were part of that hype cycle. Let's look at like the ICOs from 2017, Augur, Gnosis, you know, what is it, NEM? Like, have you heard of any of these, right? Like, I mean, maybe you've heard of Monero. I don't know, but like a lot of the things that are popular now will have the same sort of like reputation in 5 years. It's like, oh, I didn't know about that. And honestly, a lot of people just don't do the research, don't want to learn. They have sort of like what I would call a Nietzschean investing philosophy. It's not about fundamental value or the economics or the dividend or the returns or the cash flow or anything fundamental. It's all about who else is pumping it, and that's all I need to know. It's a will to power, sort of like very ends justify the means kind of investment mentality. And way too many people have that. You kind of hinted at it earlier, talking about volatility. It's a lot of momentum traders, a lot of Nietzschean investors that couldn't care less about the fundamental value. It's all about the narrative and the rhetoric. And that's all they trade on. This is the path to decivilization. This is how the things that don't add any value get funded. This is how rent seekers keep rent seeking. And then you don't have enough productive people that are actually building something interesting and new and different and productive and useful getting any money. And instead, people put their pursuits into getting rich quick on altcoins or something like that. And next thing you know, civilization collapses. This is essentially what happened to Rome. Too many bread and circuses, too many rent seekers, too many people that didn't want to do anything and still make money. That led to the fall of Rome. I think it at least leads to the fall of the U.S. dollar.
I think the metaverse is basically the fall of civilization. but you bring up a good point. Like you see exactly what you're talking about. And I remember the ICO craze, and I feel like the NFT craze is really very similar. Like, okay, what happened to ICOs? And like now everybody's into this NFT thing, and and the chink in the armor, at least on a big scale, kind of came out with this guy that did Jack's original tweet and paid $2-3 million for it, and he got like a bid for what, $350 or something like that, or something, $3,000. Like what happened?
I mean and this is the weird thing about a lot of altcoins. It's not that the price drops, it's that the liquidity drops. So what you'll see oftentimes is not that it'll drop 90% in price, although it'll do that too, but the volume of trading dries up significantly. So if you try to sell even a little bit, it drops the price too much, so you don't feel comfortable doing it, and that gets people to hold. I was tracking Mastercoin for a while. Their volume on a per day basis was like less than $100. This was one of the coins from 2013. I think they've rebranded themselves Omni, but basically that was their thing. Was okay, we're gonna do this thing, and that's how these coins die. They don't actually die. They live sort of like this weird zombie existence where everyone is afraid to dump because they're not going to get anything for it, and if it's going to be close to zero anyway, might as well hold it to see if it'll pump once.
Sounds like Bloom.
Yeah. Meanwhile, the creators of the altcoin dumped it early on before it really
or they dumped enough of it to make back their money and then some, but they still keep a lot of it so they can control the coin and so on. So that's the situation with Ethereum and Cardano and all of these guys. Even Ripple, they're selling every week, some amount of Ripple, ostensibly to fund their political activities or hiring Snoop Dogg for their consensus party or whatever it is that they do.
Would you say, just not to interrupt you, just add a quick question on that. So would you say that, like, if somebody wanted to try to match, I'm sure they've tried that, but to match Bitcoin just all along the way, just, and try to create a competitor along the scale, but match it exactly, would the downfall be exactly what you're talking about? There's a kind of a will to try to get rich off of the thing, and so that's what would kill
that's
it.
Part of it, but there's Bitcoin almost had an immaculate conception, and this is something that we talk about in this industry a lot. Like nobody knew what cryptocurrency was when Satoshi released it in 2009, and so it had a very fair launch. Every coin after that had a lot of hype going into it. And you can't avoid it because people are interested in it because they want to get in on the ground floor. And that means that like it doesn't have, you can copy the features technically, feature for feature. Heck, the US dollar could do that right now in a CBDC and say, you know what, we're going to have, very fast settlement, and we can have, QR codes, and you can have paper backups and all. I still wouldn't use it. Why? Because it's centrally controlled. It's it doesn't change that fact, and decentralization is one of those things that Bitcoin has, almost miraculously. Every other coin has tried to get it, well, at least nominally speaking. And they haven't achieved it. And I don't think they ever will. And if you started a new coin, you wouldn't get it either, because somebody had to start it and so on.
Pretty interesting. It really is kind of a one-of-a-kind thing.
Mm.
Very interesting.
Wow, man, this has been great.
Yeah, this has been terrific. Thank you very much, Jimmy. Really appreciate it. Tell us where our listeners can find out more about you and where they can buy your books.
Well, you can find me on Twitter at Jimmy Song. My website is programmingbitcoin.com. You can also sign up for my newsletter there. And my books are, all on Amazon. You can go to my website. It has a description of all 4 books and links to go buy them. And yeah, there's a bunch of other stuff that I do, including a podcast and speaking engagements and stuff like that. You can find most of it in my newsletter. So subscribe to that if you're interested.
Fantastic.
Great. We'll be sure to put that in the show notes. Thank you so much, Jimmy. It's been a real pleasure.
Thanks for taking the time with us today.
Thank you.
All right.
10X for Gen XYZ is hosted by Zach Winter and Markader Rios, co-founders of Prosperity CRE, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and building long-term wealth. If you like the podcast, please give us a positive rating and subscribe to be notified about future content. Also, if you'd like to learn more about our approach to real estate investing, you can download a free copy of our real estate investment book, Investing for Cash Flow and Long-Term Wealth, by clicking the link in the show notes below. Thank you and stay tuned for our upcoming episodes.